Hello, 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 and welcome to the Liquidity event. We are your hosts, Shane Mason.
And Curtis Rolf.
How we doing, Curtis?
Didn't do last names last time, Shane. Sorry, you threw me off there.
Yeah, I started doing that recently. I just want people to get, first and last names in here. And this is episode number 64 of the Liquidity event. We are recording this on October 19th, 2022. It'll air on October 21st, 2022. Today we have news about Intel cutting jobs ahead of the slowdown in global PC sales. Fed officials have been trading stocks. Surprise, surprise, a little insider trading from the government. And the world has its first anti-ESG ETF. Wow, that's a mouthful. We'll explain what the hell that is. And then we have a look ahead to Q4's IPOs, see what type of liquidity events are coming up on the horizon. Curtis, how are we doing today, buddy?
I'm doing excellent. It's been a really good day. It's sunny here in California. Not too hot, so it's been really enjoyable. How about you?
You're telling me it's sunny in the Golden State right now.
Shocking.
In California.
I know.
Nothing but sunshine over that shoulder, I see, buddy.
Right.
Thank you for wearing your fancy, exclusive members-only Liquidity event sweatshirt that you only get if you become a host or a guest on the Liquidity event. We love to see it.
Yeah, it's my new favorite sweatshirt.
Yeah, it is really comfortable, isn't it?
It is, yeah.
I brought that with me all the way out here. I am recording from Portugal today. I am on vacation, but I love the Liquidity event so much that I'm recording this after a handful of beers and a red eye from New York. So let's hop in. We have a ton of articles today, Curtis. I think we have some carryover from last week. I think AJ and I did a little deep dive in just a handful of articles. So what do you say we just hop into something light to start us off? We have here a hot sauce brand in hot water, an article from LinkedIn. This is definitely from AJ, the LinkedIn Crusader. I can't really handle LinkedIn's fake professionalism. Are you a LinkedIn browser?
I'm not a LinkedIn browser. I have LinkedIn because that's how people find me sometimes. But other than that, it's pretty dormant on my side.
Yeah, I'm a little bit of too much of a devil's advocate for LinkedIn. I like to stir the pot, and it's probably a bad place for me to exist. But anyway, this article is coming from LinkedIn. It's about a lawsuit over Texas Pete's hot sauce. I used to live in Texas, big fan of Texas Pete. Actually, not a huge fan of Texas Pete. It's not spicy enough for your boy, but apparently Texas Pete's hot sauce is made in North Carolina.
Right? Apparently, they also put that right on the bottle, so it shouldn't be a surprise to anyone.
Wait, is that true? They print it right on the bottle?
I mean, they don't put it like Texas Pete's made in North Carolina, but like if you look at where it's made, it definitely says like produced in North Carolina kind of thing on it.
How do we feel about a lawsuit? So the premise is that somebody is upset that Texas is being misrepresented, or that Texas Pete's legacy as a Texas shooter, cowboy, builder, man, ranger is being besmirched by these North Carolinian factories. Like, who really cares?
My thought was like, don't people have better things to do? Like, it's just, I don't know. And it's a guy from California, so it's not like even a Texan is mad about Texas Pete's. It's a Californian is mad about Texas Pete's.
If there's one thing Texans don't like more than gun control, it's people from California.
Right, exactly.
I'm a huge hot sauce enthusiast. I'm going to go top 5 hot sauces: Crystal, Tabasco, Louisiana, Yucateca, Sriracha. How do you feel about that list?
I feel like it's a pretty solid list. Definitely, I'm not an enthusiast. I do enjoy my hot sauces. But yeah, that's a solid top 5. And again, it's hard. It's hard then to be like, oh, I love this one specific hot sauce that you can only get wherever because it's like a mom and pop shop hot sauce. But that's a good mainstream hot sauce list. I approve.
If you had to drink hot sauce directly from the bottle, which hot sauce would you drink?
So ease of drinking, it'd have to be Sriracha because it's a squeeze bottle. But flavor-wise, I'd go Tabasco. I don't want to shake a bottle in my mouth for 45 minutes to drink the bottle of Tabasco, personally.
We used to pour Tabasco into the cap of the Tabasco bottle and take shots of it in middle school because I grew up in Mississippi.
That's pretty awesome. That's real hardcore, Shane.
That's right. Everybody needs to know how badass your boy is. All right, let's move on to an actual article with meat on the bone. Still a spicy meatball. Intel plans on cutting thousands of jobs in face of a PC slowdown. Intel, led to greatness by Sir Andy Grove, or Mr. Andy Grove. I shouldn't call him Sir. He's from California, not from Cornwall, is cutting probably a few thousand jobs ahead of the upcoming global PC slowdown. It looks like there's going to be big cuts, according to sources in the sales and marketing department. We can see up to 20% of those departments being cut. It looks like their margin, and they have an earnings call coming up on October 27th. And it looks like these cuts are intended to buoy the bad results that are expected, according to that upcoming call. What do you what do you think about these cuts? How do you feel about the overall macroeconomic environment and how this is impacting Intel?
Yeah, people losing jobs always sucks. I mean, that's never fun for the human beings that are behind these numbers. It feels like it's par for the course from what we're experiencing. High inflation, a downturn in the tech market, supply chain issues specifically. Like, I know that we've been having problems with a chip shortage from all that stuff. So if you can't get your chips here to put in your computers when everyone was buying, now you have a surplus of all that stuff, and it's going to be harder in a recession when people don't have the cash or desire to replace their personal computer as often. So,
yeah, I'm looking at Intel stock over the last 1 month, down 12%, 6 months. What would you guess?
40.
45. Yeah, not looking good. Year to date, down 51. Last year, down 52. Yikes. Come on, fellas. Supposedly, they're seeing a lot of competition from AMD as well, which is actually innovating. I don't know if you build computers. I feel like you've built computers in the past. You and I
I feel like I should build computers, but I've never built a computer.
Why don't we build a PC together at our upcoming retreat in LA? I think that would be
perfect. I'll bring the parts. We slot the time off.
Cool. But I have been seeing that AMD, one of their big competitors, has been innovating in the speed and price department. And I know that there's also ARM in the UK that we talked about. Micropublic is one of the biggest private companies out of the UK. Chip manufacturers is also looking to compete as well. So Intel is struggling like other tech giants recently over the past year. All right. So what else do we have? Speaking of struggling to make an honest buck, we have federal officials trade stock in companies that their agencies oversee. We've got folks from the EPA. This is a Wall Street Journal article. This is a deep dive investigative journalism. This headline sounds nefarious, but we actually realized that they looked at over 31,000 transactions across thousands of employees over years and years. It turns out that over 20% of federal employees trade stocks in the companies that they manage. And by manage, we're talking about the EPA overseeing oil and gas companies. We're talking about the Treasury Department overseeing, the purse strings of the economy. How do we feel about people in the government trading individual stocks when there are perfectly good alternatives?
Right? Yeah, I'm disgusted but not surprised was my feeling when I read this article. This has become more and more to light, and unfortunately, it's the government who decides the senators decide if they can do this or not currently. So why would they cut off their ability to trade stocks, basically? I mean, it's dumb. There are ETFs out there. It's easy to be diversified in your millions and millions of dollars, but that takes you out of the pocket of lobbyists. So it doesn't seem like there's much upside for senators or government officials to curtail this behavior.
Yeah, I mean, it's so hard to pick stocks. Even, dozens of mutual funds go out of business. Probably hundreds of mutual funds go out of business every year because they can't pick stocks. Why would these individuals that work with the government think that they could pick stocks any better than them unless they're benefiting from inside information? Like when
Exactly.
ETFs and mutual funds easily provide diversification at almost no cost to these holders of these stocks. I mean, I
Right.
find it very funny that the Treasury of all the departments is the most egregious. They think that they understand what's going on. The EPA was surprisingly the second most egregious of the departments that was trading on oil and gas stocks as they, lobbied and, they didn't lobby, but, controlled them.
Right.
Speaking of environmental investments, we have our world's first anti-ESG portfolio. It's called the God Bless America ETF, and its ticker symbol is hilarious. It is YAL. What do y'all think about this ETF?
Oh my gosh, it's priceless. Like it's so like extra woke or anti
It's
woke. I
anti-woke.
don't know. It's anti woke. And it's hilarious because I was looking through the holdings of it, and I don't know what their definition of anti ESG is because it's like renewable energy companies. Like Tesla is the biggest holding in this with almost 8% of the portfolio. Like I don't get it. Like I don't understand how it's anti ESG if they're doing electric vehicle companies and steel recycling companies. It seems like someone's trolling them almost.
Yeah. Interesting point about Tesla. I mean, Tesla has performed very well over the past, 10ish years or what have you. But when we build, because we build ESG portfolios for our clients
We
all the
do.
times. Yeah. And it is funny that sometimes Tesla is excluded from certain portfolios that are quote unquote ESG. Just a reminder that ESG is simply looking at a basket of stocks and deciding which ones not to include or which ones you want to screen out of your specific ETF for whatever reason that you choose, whether that's gun control or environmental reasons or oil and gas, or not enough women on the board or not enough diversity at the company in general. And that reminds me of Tesla because they are, while they're great for the environment, leading the charge in environmental or electric vehicles, trying to kill the internal combustion engine, they have terrible diversity at Tesla. There's almost no women in the board, and it's mostly white fellows, I believe, at the company in general.
Yeah, it's the G in ESG governance is
Mm-hmm.
not so hot at Tesla.
Yeah, so I just have to read y'all's prospectus. The sub-advisor eliminates companies that, in the sub-advisor's assessment, have emphasized politically left and or liberal political activism and social agendas at the expense of maximizing shareholder returns. So I think that's fun. It
Yeah.
is featuring a 65 bips expense ratio. So you're almost paying a full percentage point just to hold this ETF, to hold Tesla and Nvidia and Amgen, which are giant S&P 500 companies.
Yeah.
And it holds a basket of about 30 to 40 stocks in its actively traded portfolio. All right. Cool. Well, if there was a portfolio that was anti-sin stocks, such as tobacco or alcohol, then liquid death would definitely be involved in that ETF. We have this liquid death.
Absolutely.
Have you heard of liquid death? Tell our audience what liquid death is. This is Bloomberg article. Liquid death.
Yeah, Liquid Death it's a sparkling water company, but they don't do any flavors. So it's literally like this can, a black and silver can with like a skull on it, and it's 16 ounces. It looks badass, but it's just sparkling water. And their big push is like they've been getting into a lot of different like music venues and all that. So it's a non-alcoholic alternative that still looks like alcohol. So basically, I mean, again, I don't understand why people have to do this, but like assholes out there being like, "Oh, why don't you have a drink?" Like,
Mhm,
who cares? It's my life.
mhm.
So it's a nice alternative to get harassed less, basically, to at events, seemingly.
Yeah, I mean, yeah, I think America in general is trending towards moderation. I don't have any data in front of me here, but I mean, anecdotally and personally, I have been trying to trend downwards as well, heading into my mid 30s here. But you can see it in the growth of companies. We've talked about Athletic Brewing Company. Everyone listening to this podcast, if you listen to podcasts, have probably heard an advertisement for the alcohol-free uh, Athletic Brewing Company distillery that won a beer tasting championship, like a global beer competition, even though they don't have any alcohol in the beer. Um,
That's awesome.
so as the growth of non-alcoholic beverages trends upwards, Liquid Death has been valued at $700 million, which is an incredible valuation for this company that hasn't been around all too long. I first heard about it when our director of ops, Miss Alexa San Ramon, started drinking it. She's never had, this is crazy to me, an alcoholic beverage in her entire life. And then she started rocking these liquid deaths on the Zoom calls. I wish that, there was more. As someone that frequently goes to social events, I wish there was like less obvious non-alcoholic drinks, right? Like I can tell an athletic brewing drink. I can tell a Heineken is 0%. They had that giant 0% on the bottle. And you can tell that Liquid Death is also non-alcoholic. So like you're almost asking for the conversation about why you aren't drinking while you're doing it for like the numbskulls that have to have the conversation with you. So I wish there was a little bit more discreet packaging on non-alcoholic beverages. I guess you could just drink soda water, and then it looks like you're drinking gin and tonic.
Yeah, throw a lime in it. No one knows the difference between that and a gin and tonic or something. Sure.
Yeah, but then the bartender looks at you like you're crazy, and how much do you charge for that?
Right. Exactly.
Life's conundrums. These are the things that I think about late at night.
That haunt me at night.
Speaking of things I don't know what's going on with, this next article. This next article is all you, Curtis. We got a Reuters article about Vodafone's active investor, relevant to their stake in Vantage. Give us the rundown here.
Yeah, so Vantage is like a cellular tower company that's a portion of Vodafone. And apparently there's a French...
This is the voice over internet company, or do they do regular...
They do regular cell phones and stuff too as well. I think they do both.
It's like a European thing.
It's definitely a European thing, 100% a European thing. But a French billionaire came in, got a 2.5% stake in the company, and basically started throwing around his weight. So this has like very much, Carl Icahn vibes to it. Like someone coming in with a lot of money saying, hey, you're doing a crap job at running your business. This is how we should do it instead. So the idea that there's the November 15th deadline is kind of this guy's, his name is Xavier, is kind of his deadline of, hey, make some moves. And part of that is apparently selling a stake of Vantage, which is apparently becoming somewhat challenging for them because there's really not a huge market for it. And the people that are interested don't necessarily have the funding to come up with it. And the big giants in Europe aren't interested in the stake that they're willing to sell. So I don't know. It's an interesting time with seeing more and more billionaires kind of come back to this idea of, hey, I have a lot of money, but I don't want to start my own company. So I'm just going to tell this public company how to run their business.
Do you think that the U.S. market is a triopoly, or we have enough competition in the U.S. market when it comes to cell phone service that we're getting good deals from T-Mobile, Verizon, AT&T, Sprint, et cetera?
I don't think we're getting a good deal because, again, that's a great point. It's absolutely a triopoly because, again, even if you get Cricket or whatever subsidiary of AT&T or Verizon or whoever, it still goes back to those parent companies. So, I mean, but it's also kind of that issue with, if we look at the allowed monopolies of like electricity providers or, the normal utilities that we obtain. There's nothing to do about it because it's so egregiously expensive to get in on that infrastructure that you're kind of stuck with what you got for the most part.
Right. Yeah. All right. Well, with that said, speaking of seeing what we got, we have Q4 coming up. It is only the second to third week of Q4, and hopefully we're going to finally see some sizable IPOs coming down the pipeline for the year 2022, making it a total flop, so to speak. Tell me a little bit about what we're looking at in the upcoming IPO space.
Yeah, in the upcoming IPO space, it's the first $100 million plus IPO of Q4. We've got that. There's also an IPO. It's another spinoff, and I'm blanking on who's doing it. Do you remember, Shane?
Talking about Mobileye?
Yeah.
Oh yeah,
yeah, the self-driving car company.
Yeah, we've been talking Mobileye over the past couple of weeks. So it looks like they will be cleared to IPO to launch its IPO in the next few weeks ahead. So we will be watching that closely. The ticker symbol on Mobileye will be MBLY. And then, yeah, it looks like Prime Medicine is out of Cambridge, Massachusetts. They do gene editing therapies for various diseases. Let's hoping that CRISPR can fix my issues. I saw an article recently that the founders of biotech are looking at vaccines for cancer. I think that they're close to breakthroughs in that cancer space, although I don't really have. Yeah, just reading headlines out over the podcast is a great idea without actually backing them up.
It's the best thing ever.
Yeah, I saw some guy the other day at the bar was telling me that we live in the Matrix. Speaking of the internet, Amazon Prime Day 2.0. Did you participate? This was last week, early last week. No?
I did not participate. I don't know. I've been turned off from Amazon's Prime Day or whatever summer spectacular stuff because most of it I don't need.
Mm-hmm.
And a lot of it that's a deal apparently is no longer a deal. They hike the price before Prime Day and then say, look, 40% off. And it just becomes, you can find it elsewhere for the exact same price, not on sale, basically.
Classic. Have you ever used that website? Yeah. Is it Camel where you can find the price of things historically?
I've never used Camel. That sounds cool.
Yeah, well, if you build computers, Curtis, like the nerd that you are, like I am, then you would have used Camel to get the best price on graphics cards, monitors, CPUs, etc. It's a cool. I think it's called Camel. It's been a little while, but yeah, if you Camel those Prime Day items, I bet you can see the spike. Like you can see them flat, like just like when you look at Google Flights and it shows you the history, so you can see when you could have bought the dip and bought the bottom of that flight. Google Flights is great for traders, and investors. So I've never been excited about Prime Day either, ever since the first one. I think it's interesting that they're now doing 2 in a year. They do one in the summertime, and then they do one just prior to the holidays to try to get a jump start on the holidays. Maybe this is due to the global supply chain issues that we've been seeing over the past few years. They figured they would push out sales a few months, maybe get some of that just accelerated a bit. Make sure we make it by Christmas. Speaking of getting things ahead of the holidays, I picked up my Halloween costume a few days ago. I'm going to be Dr. Shots for the 5th year in a row. Have you got your, this is the doctor that has syringes you fill with Jack Daniels and you diagnose people with sobriety. Curtis, what are you going to be for Halloween this year?
You know, I'm not a huge Halloween person. I get nothing against, people will freak out.
Are nothing you an anti-Satanist?
I am. I was born and raised, I was raised in St. Louis, Missouri, buckle the Bible belt. So, can't have any of that demon stuff going on. No, it seems like a lot of effort, and I've never really gone to a ton of parties. So there's never really been the need to do costumes. So I hand out candy to the kids in my neighborhood.
You don't build computers. You don't dress up for Halloween. That's 2 strikes, buddy. Let's see if we make it to the end of the podcast without...
I know. I'm never doing this again.
Enjoy it while it lasts. You got 6 more minutes. Speaking of things that don't last forever, Wall Street Journal here has an article about first-time marriages are on the rise for people in their 40s and 50s. I'm not bitter about not being married. I promise. First-time marriages are on the rise for people in their 40s and 50s. This is a cool article. It's a really long piece about how, it's kind of a profile piece about people that are just, statistically getting older before they get married for the first time. So we got the younger or the latter piece of the Gen X generation and the older millennials, people in their mid 40s, like my big sister, who did not get married until maybe she was 39. And I'm not married at 35. So anecdotal, but here we are. So how do we feel about you got married younger than these folks?
Yeah.
Curtis, talk to me about your marriage.
Well, I was 27. Talk to me about your marriage. This is therapy.
We got 5 more minutes. So
5 more minutes.
This is free.
Yeah, I was 27. My wife had just graduated undergrad. So she was 22. So she definitely got married on the younger side of things. Mm-hmm. I think this is a common kind of shift. And again, the more traditional values that mine and her parents ascribed to, some didn't force the marriage, but we had expected to have a big wedding and all of that stuff. We probably would have gotten married sooner because we were ready for it. But we were waiting for her to finish college and us to move together to California before we kind of tied the knot there. So there's a lot of cultural stuff that goes on with weddings and marriages and
Mm-hmm.
why you do it. And, you know,
Mm-hmm.
I think that it's funny when we talk to clients and they're like, well, does it make tax sense for me and my, you know, partner that I've been living with forever, for 10 years to get married? And it's like yes and no, depending on the situation, of course. But that was definitely not where we were at for, making that decision. So I think for us, a lot of things are shifting later. And there's that memory of, well, my parents didn't wait this long to do that. Isn't my life over already? Type of thing. Like, I don't own a house. I don't think I'm going to be in a position to do that necessarily anytime soon. A lot of folks our age, Shane,
Mm-hmm.
a lot of our clients our age do own houses because they work in tech firms and have had liquidity events. But
Mm-hmm.
a lot of folks are renting now, and that's just kind of our expectation and reality because of everything that's gone on. Living through multiple once in a lifetime events, financially is always interesting and sometimes frustrating. But, I think we adapt and continue to move on with our lives and roll with it.
Yeah, a couple comments. Yeah, I agree. Our clients are exceptionally blessed to have financial stability more often than not than your average person that would be sampled in this study, or your average Gen X, Gen Y, or Gen Zer. And then I mean, we're struggling to reach certain milestones, and marriage is just one of them. I have a pet theory that is, I'm going to call it the fruit roll-up theory. And it has more to do with life expectancy than intergenerational solidarity around our woes. And that is, if you stretch out a fruit roll up, there's just more of it. So maybe you just push back things that happen on that timeline. You just got more time to hit certain milestones. And I think that's fine. I think it's all good. So essentially, since we're living 10, 20 years longer, maybe we push back marriage, 5, 10 years. No big deal.
Right.
Is it?
Yeah.
Is it a big? And I want to, where's the divorce rate at relative to these later marriages?
That would be, in 10 years, I think that'd be an interesting follow-up article of all these people who got married in their 40s and 50s. What percentage of them stuck together and which percentage fell apart?
Stay tuned next time on next week's episode in the year 2040. I don't have a good segue here. John Owens, our director of financial planning, slipped in an article about the town that he lives in. Apparently, Lancaster, Pennsylvania, was listed as the best small city in America, according to John Owens. No, this
ABC 27 local news.
No, it's this website Wallet Hub, which apparently looked at thousands of small cities and looked at the school zones and the tax rates and engagement and crime rates, and it looks like Lancaster hit the top of the list. I took a nice. I thought that was cool, and I also looked at I wanted to see the demographics of Lancaster, Pennsylvania, as well, because I had expectations. It turns out Lancaster's only 58% white, 20% black, and the rest are made up of various ethnicities. So I find that very cool. Shout out to John Owens as a member of the Lancaster, Pennsylvania populace. Oh, let's talk about student loan debt relief. This is kind of cool. We've got the mechanics on how to request. We're going to bury this all the way 27 minutes into the episode.
Right. Yep. You got to wait till the end for the good stuff.
We're calling this Biden student loan relief. Apparently, we have a preview on how you're going to be able to request debt relief. Apparently, you can do it on your phone.
I could.
What are your thoughts on the ability to request relief?
I mean, that's neat. I mean, it's not as simple as it's on your phone. I mean, I clicked the NPR link and they had updated the article, and basically it's a web page that you fill in your personal information and say that, yes, I made less than $250,000 in these certain periods of time, and send it off before December 31st. So it looks like the page is live now to
Great.
get forgiveness for your student loan. So
Great. Yeah, it looks like you
yeah,
have until December of 2023 as well to apply. You don't need any documentation. You just need to verify or validate or attest that you make less than that income threshold. I guess they'll tie your social security number to your tax return with this validation. I'm assuming this is also going to be on the IRS's plate to deal with this, just like everything else.
Everything else.
And they'll be able to see if you lied or not. But best of luck to those of you that are trying to get forgiveness on your phone. I could not even buy tickets to a concert on my phone the other night. So getting $10,000 from the government, good luck, everybody. All right.
Right.
Wow, we got through a lot of articles today, Curtis. Thanks for hanging in there
We
as
did.
we
We
speed
crushed
ran
it.
those. That was a speed run of articles trying to catch us up ahead of next week's clearing it. Thank you, listeners, for listening to episode 64 of the Liquidity Event. You can email us at liquidityevent@brooklynfi. If you have any questions, we will read you answers on the air. If you leave us a voicemail, we will play it on the air. Show notes are available at brooklynfi.com/episode 24. And you BKFI stands can leave us a review on your podcast app if you want to be weird about it. We appreciate it if you do. Thank you, everyone.